Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update on Dakota Gold. Dakota Gold is traded on the NYSE American under the ticker DC, and they are revitalizing in South Dakota the old Homestake Mining District. And they have two main projects, the Richmond Hill and the Maitland Gold Project, that both tie together into a pretty big resource here of over 6 million ounces of gold just in the oxide for Richmond Hill. And we're joined today with the CEO of Dakota Gold, Bob Quartermain. And Bob, some of you may know, is a household name because of his tenure in Silver Standard and Pretium Resources. And Bob, it's great to have you on the show for the first time here on the KE Report. And I think maybe just to kick it off, why don't you share your story as far as your industry background and how this is not your first rodeo. You've brought several other projects to development, production, and then eventually sold some of those projects to other producers or left them in a big legacy company. And now you're doing it again here at Dakota Gold.
Well, Shad, it's a great pleasure to be in the Corlin Report. I've had a great industry experience, as you say. I started back in the business in 1977, particularly in gold and uranium at that time. I'm a geologist. I have an undergraduate degree from the University of New Brunswick, a master's in mineral exploration from Queen's University, and have spent my career across the entire platform of exploration into mining production. And, some of the mines that I've been involved with was the David Bell mine at Hemlo. I was a mine geologist there. I worked as a mine geologist at the Maitland Gold mine for the Tuck organization. And in 1985, I was appointed president of Silver Standard Resources. At the time, the company had two employees, myself and the secretary, and a market cap of about $1.8 million. And over 25 years, we took that to a market cap well over $25 billion. We discovered and actually developed a few mines around the world. In 2010, I retired, and then I went on to become president of Pretium Resources, and that was the focus on the Brucejack mine. So while I was working at Silver Standard, I had experience in working in high-grade underground mines with open pit potential, such as the Manantial Espejo project in Argentina. We built and constructed the Pretium mine. I was involved with the construction from an exploration perspective with respect to the Tarkwa mine in Africa. And then most recently, starting in 2010, took the Brucejack asset through Pretium and took it from exploration all the way through to production, being Canada's fourth largest gold producer at the time. And it was eventually sold for over $3 billion to Newcrest, and subsequently they merged with Newmont. So it's now one of Newmont's key assets up in the Golden Triangle. So lots of experience around the world, but more importantly, I've worked both underground and in open pits. And I have that technical ability that I can bring to the opportunities that we see before us in the Homestake District.
Well, let's talk about that because you really have the best of both worlds there. You have underground potential and you have open pit at surface potential. Let's maybe start with reminding people listening of the Homestake mining legacy. And I'm always fond of telling the story that in 1929 we had the Great Depression. The stock markets roiled for the next couple of years, but the number one performing stock was Homestake Mining. And this area in South Dakota had really been forgotten about for a while, and it's coming back to life now. And you have the extension to the north of that old mining district with the Maitland Gold Project. So let's maybe kick it off with Maitland.
You're right. That's why I got involved in Dakota Gold 5 years ago myself, as I looked at some regional maps with respect to the Homestake District. And the mine was shut down in 2000. It had operated for over 120 years, since 1878, and produced over 40 million ounces of gold from an area about 2 to 4 square miles. So very rich mine. It was discovered at surface, and they mined down to depth of 8,000 feet below surface. And it's in what we call a banded iron formation. And it's a very folded up rock, but it's got good quartz veins in it. And the average grade of gold was around a quarter of an ounce, or about 8 grams. And so from 160 million tons, they produced the 40 million ounces of gold. And some years, as you point out, it generated a lot of cash through its production, over 500,000 ounces, both for Homestake, but more importantly for the state of South Dakota, and also for the U.S. government during those Depression years. And so it was shut down when gold prices were around $300 an ounce. Here we have gold prices an order of magnitude above that. And when I looked at the long section, there'd been very little exploration which had been done to the north, which is where we have our Maitland project. And so we took an option on that property. We actually bought it from Barrick. We optioned the surface rights of the old Homestake mine, so we'd have an area perhaps to put facilities. And we went in and started our initial exploration on it as you say, 3 or 4 years ago, and have had some great success there to date with some of our high-grade drill intersections.
Well, and I think that while that's a big focus of the company and you've done a lot of exploration there, what seems to have moved more front and center since we've talked to the company last is what's happening at your Richmond Hill project. So this is somewhat adjacent to the Maitland project, but it's an at-surface oxide gold project that now has over 6 million ounces of gold in all categories. And you just updated the market with this resource quite recently. So maybe give us the highlights, Bob. What are the key takeaways for investors listening in about Richmond Hill right next door?
Right. Richmond Hill is only about 2 miles from our Maitland project. So the nice thing about the opportunities that we have in the Homestake District, we have over 48,000 acres of public as well as private land. Much of the resources we're talking about are all in private land, which has implications for getting those assets permitted. But importantly, the Richmond Hill project has been around since the 1980s. It was an old mine that had produced 170 odd thousand ounces back in the 80s, again shut down. It's again only 2 miles north of Coeur's Wharf Mine. The Wharf Mine's been operating for over 40 years now and has produced over 4 million ounces during that time period. So the best place to look for mines is where existing mines occur. So we picked up the property. We took an option from Barrick a few years ago. We went in and we were able to use the 900 historic drill holes. So using other people's money to look at that asset base, we had all the drill assays available to us. We've drilled over 150 holes ourselves. And as you point out, we came up with a very robust resource in February of this year, where it was informed by more than 1,000 drill holes. And we had 3.6 million ounces of measured and indicated gold and 47 million ounces of silver, which is important. I'm a bit of a silver bug myself. And 2.6 million ounces of inferred resources and another 52 million ounces of silver. And the gold in the measured and indicated is at about a 0.46 grams. So a very robust grade with respect to the current gold price that we're having. So we've outlined this large resource on the Richmond Hill area, again, 2 miles from Maitland. And the Richmond Hill property itself is on private land. It's about 3,000 acres. And so that's important as we look to advance this through development into production.
Well, and currently the team is working on the economic study, and this is for Canadian listeners, you'll think of it as a PEA, a preliminary economic assessment. For US investors, it's an IA with cash flow. So this is basically taking your resource and working towards what the economics will look like on it. Maybe talk about some of the work going on right now to build towards that key milestone.
That's right. We have an excellent team, and we can speak about the team down in South Dakota in a minute. But we have a group of industry professional consultants under M3 and Respec who are doing the work on the mine planning. We have different consultants working on metallurgy. So as you point out, we're doing all this study right now based off the resource that we have in coming up with economic parameters about what are our capital costs going to be? What would our operating costs going to be? And the one benefit that we have, Chad, as you would know, we're again 2 miles from an existing mine. Many of our employees have actually worked at the Wharf Mine. So we have relatively good real-time data that will help inform our study. And we've been working on it since the resource in February. We've indicated we'll have it out mid-year. We're approaching that now. So we're hoping over the next short period of time, we'll be able to issue the IA with cash flow. And we'll look at two aspects of it. We'll look at first with the measured and indicated resource, which is 3.6 million ounces of gold, and then look at the overall project with measured, indicated, and inferred, as you point out, so we can see what that would look like over the whole mine life. And with that, of course, we're looking at permitting obligations that we have. We've got a small footprint with our 3,000 acres, but because it's on private land, it means that we come under regulations from both the state and the county. And so we don't come under a federal process at this point in time. And so that's one thing that can help us certainly advance this along a timeline and into production in a relatively short time period.
Well, let's get into that. I think that's a huge advantage being on the private land for permitting, as you point out. But you do have a roadmap as far as what this looks like. And it looks like you project out to 2029 as far as when you think you could get into production. Walk us through some of the key steps along the way. Obviously, this economic study coming out, but then what else has to happen on the road to production?
Right. The first thing, of course, is to do all the underlying baseline work. I've been involved in the development of 7 mines now around the world. And so understand you need to operate with a social license. So first, what does this currently look like? And what will it look like while you're in operation, and what's it going to look like when you close? So we need to do all the baseline work, and we started that last year, so we need about 2 years of baseline work. We'll also go from this initial assessment with cash flow right into a feasibility study. Because of our location near existing infrastructure, it's only a 15-minute drive from our office to the project site. And, Lead and Deadwood have many people living there. Many people worked at the mine. We have the opportunity to hire locally, which we certainly focus on as a company. But we'll be able to look at, that real-time data to be able to come up, inform the feasibility study. We hope to have that completed sometime in early 2027, and that would then start the permitting process. And based off of the prescription of what you need to be able to do in South Dakota and with respect to Lawrence County, we think that's about a 12-month period. So when you kind of look at completion of the IA with cash flow, feasibility study, your baseline work and permitting and engineering, we're looking sometime in 2028 to get that all completed, which could allow for construction late 28 into 29. And we would therefore have one of the largest resources, oxide resources, held by a junior currently in the United States, and one that can be almost quickest to production. There are very few other companies out there held by juniors that can have that defined timeline into production. So that's the best way to create value for shareholders. Get this up in production and then capture that premium value that the producers are currently getting in the market right now.
Yeah, it's a great point. With these gold prices and even silver prices, it makes any project domestically in the U.S., and even with the current administration being more friendly towards mining and being pro-development, a lot of pluses here stacking up for having that many gold and silver resources in South Dakota. Now, you've highlighted the strength of your team, and I think it's worth spending a moment on, Bob, because you've got some people that have worked both at Homestake and at Wharf, and they live local, and they understand the geology, and they understand how to build mines, and they understand engineering. So let's highlight a couple of people on the team.
Yeah, for sure. If we start with the overall corporate, my co-chair on Dakota Gold is Steve O'Rourke. Steve spent many years working with BHP, but he's actually was educated in South Dakota, lives down there, and as a fellow geologist understands, what we're trying to accomplish here. Jerry Aberley just retired as our COO. He's still on the board. This whole project came about from Jerry. Jerry worked at the mine for many, many years in the mine manager roles, and he stayed in South Dakota, believed in the asset, and it was 5 years ago that I met and said, hey, here's the opportunity that we still think there's gold in the Homestake District, and of course, we've shown that with the work we've come up with Maitland and Richmond Hill. So Jerry was certainly key. He's on the board. We've just recently hired Jack Henris as our president. Jack actually lives in South Dakota. He's had a great career working with many senior mining companies, but more importantly, he has experience with heap leach operations, but he also worked at the Homestake Mine many years ago and was involved in permitting. We have Sean Campbell, who's our CFO, and Sean had many years working with Goldcorp. He actually had experience working with the Wharf Mine when Goldcorp had it. James Barrier is our Vice President of Exploration. James is currently living in South Dakota as well. James worked at the Homestake Mine for many years and then also worked at the Wharf Mine. Lindsay Chaston, our senior geologist, she spent many years working at the Wharf Mine. So it's key when you have that experience when you're looking at developing something like our Richmond Hill project, where you have people who worked at the Wharf Mine. They know how to be able to manage and make sure that opportunity goes forward. The same with someone like Ron Everett and Tim Comer, also our business manager, but our environmental manager, who've lived and worked in the area for 30 to 40 years. They had that local expertise and that lens on social license to make sure that we do everything appropriately. So I'm very happy with the team we have down there because almost 90% of our employees are from South Dakota and live down in the community. And that's important when you're going to be building a mine in the community. You want to have the right social license, and you have all those advocates there who can speak about the benefit that comes from the Wharf Mine, the benefit that used to come from the Homestake Mine, and how this can really impact the community, particularly with all-time record high gold prices of $3,000 an ounce.
Yeah, I think it's so important because there's so many companies that are basically flying in a team and choppering people in into an area that the local people know these people are not from this area. In this case, you have a team that's 90% in the area, in South Dakota, have that legacy experience and can point to the success that both other companies have had. And Bob, that brings up an interesting point. I got to ask you about the Wharf Mine that Coeur is operating nearby. I know that it's been running for a while. I'm also a Coeur shareholder, in full disclosure. and I've been watching it gradually get depleted. Is there any synergies here between your Richmond Hill project and the Wharf Mine where you guys could come to some kind of agreement where you could truck it over? Is there anything like that being considered as you look at economics?
Well, there may be synergies, particularly as between the two projects are adjacent. And we mine the similar geology. The mineralization that we have on the Richmond Hill project is identical to that which they have at the Wharf Mine. As I say, we have a number of employees who've worked at both areas. The one thing with the respect to the Wharf Mine, they currently move material on and off the leach pads, and we're hoping to have a more permanent leach pad. And as a result of that, there's probably a different and slight methodology. But I think the key thing is once we have the IA with cash flow, the initial assessment with cash flow out, it allows us then to look at what our operation looks like, how Wharf is operating, and as you point out, what synergies may exist between two operations. You know, last year, the Wharf Mine produced close to 100,000 ounces of gold and generated over $94 million of free cash flow. So it's an excellent mine. And that's what we're aspiring to do as well, generate lots of free cash flow. And as you point out, it's always good to look at potential synergies in a district so you're not competing, but perhaps supplementing each other in ensuring that mining remains a strong producer for taxes and for revenue into the state of South Dakota.
Yeah, I just had to ask because it seems like there's a natural fit there, and I'm sure we'll be keeping tabs on how that develops. Now, another thing we should probably touch on really briefly is just the financial health of the company. You did raise some capital back in March, so I think you are well positioned to keep moving towards some of your initiatives. But Bob, maybe you could tell us how much money does the company have in the treasury? Does that get you through this study, or how far out into the future does that get you?
We're well positioned with the cash that we were able to raise with our banking syndicates in March. We ended up raising close to $47 million, and that's what we had at the end of March. And those funds that we raised, plus the working capital we already had, allows us to do everything we plan to do in 2025 and well through 2026. So we're in an enviable position of many juniors. This year, we're going to spend around $25 million. Will be our budget, plus or minus a few million, depending on drill results. So cash all through this year. Next year, our costs will perhaps drop off from drilling as we do more of the engineering work. And it means that we have a robust treasury with the funds that we had at the end of March. And I said that was a result of a very successful fundraise done by the brokers, around $35 million. It brought in lots of new shareholders. And of course, the financing at that time was done around $2.80, with the share price trading up near $4. We've created some very loyal and appreciative shareholders over the last few months.
One, let's maybe even talk about that. There is a really impressive roster of key stakeholders in the company as shareholders, and maybe you can highlight some of the key ones, including yourself.
Right. You know, I think it's very key when you have management aligned with your shareholders. As you point out, over 50% of the company shares are currently owned by known groups and individuals. Orion Mine Finance, who provided the $560 million project financing for the Brucejack project at Pretium, is our largest shareholder. Orion has agreed to provide us up to $300 million of capital to help build our projects in the Homestake District. So to have a major shareholder with the capital behind them to be able to do it is a very enviable position for a company of our stature. Myself, I own about 7% of the company, followed by John Ott, our previous CEO. John is still a major shareholder, and Jerry Aberley. So you have management in the company owning 16, 17% of the company, which is very good. It means we're very much aligned with shareholders. Matter of fact, in my role as currently CEO of the company, I don't receive any pay for it other than my director's fees, because I want to ensure that we keep as much money in the ground being able to focus in on. After that, we've got the BlackRock Fund. We have Marin Katusa, who's a large shareholder of the Vanguard Group, the Van Eck, Franklin, Fidelity, Barrick, through the transactions we've done with, is a good shareholder, Euro Pacific, Vestcor, Trek Financial, great group of individuals, all owning 1 to 4% of the company. And so having that alignment and support really helps us go forward. And again, they recognize the asset value of a property which is located on private land in the United States, which has a pathway defined through production and ability to start generating cash flow and get those multiples that the operators are currently catching right now with the $3,000 gold price.
Well, I should probably throw my name in the hat too. I'm also a shareholder in full disclosure. And for me, looking at that roster of different companies that have looked at it, it tells me the company has been vetted over and over again and came out as something they wanted to position. So it gives me a little comfort as an investor that a lot of smarter people than myself have looked at this and came away thinking there's value and opportunity here. Let's bring it all home here, Bob, and just talk about key catalysts that are coming up. It could be even some expiration that we haven't talked about that's going on, but also building towards the economics. What else do you want people watching out for the balance of this year, but then also anything else moving into next year that you want people to keep on their radar?
Right. First thing is the eye with cash flow, which we'll be having out middle of this year. Concurrent with that, we have 2 drills operating at the property. We're doing both the drilling, which is necessary for our environmental studies, for our metallurgical work, but we're also looking to expand the resource. At the north end of the Richmond Hill project at the Chisholm Gulch area, we've had some good results. Our best drill hole last year was 50 meters of 2 grams. We'll be drilling up on that. So there's an opportunity to actually add more ounces to the resource. So there'll be drill results coming out that your listeners should continue to watch. We talked about the Maitland project a little bit, and because that has been the area that was an initial focus, the reason is we've drilled over 47 drill holes at Maitland, and our average grade ended up being about 10.7 grams over 4 meters. Now, the west ledges of the old mine, 6,000 drill holes in there, the average grade of the west ledges was 11.6 grams over 6 meters, and it produced over 6 million ounces. So we think there's an opportunity to outline a really significant resource at Maitland. We currently have our engineers working on it, and it may well be in the fall that we could come up with an initial inferred resource. So we have the development opportunity going on at Richmond Hill, and at the same time have this high-grade opportunity at the Maitland project within what we call the JB zone that we could look to follow up on and be able to get enough drilling that would justify going underground and continue to evaluate that multi-million ounce potential which we have there. So lots of data flow coming out largely through the drill bit and through studies through this year and into next year.
All right, so a lot going on as far as the news front with Dakota Gold, so we'll keep tabs on that news and follow along with it here at the KE Report. For those of you listening in, definitely click on the link down below in the show notes. It takes you right over to the Dakota Gold website, straight to their news section, so you can sign up for updates and have them hit your email inbox, or just following along with the news as it hits the wires. Bob, it was great having you on the show to overview the Dakota Gold value proposition for our audience. It's something that I think has got a lot of potential. It's got a lot of gold, a lot of silver domestically in the U.S., and a lot of catalyst on tap. So I always appreciate getting the update and looking forward to our next conversation.
Thank you very much.